We're in Moscow in the offices of Sberbank Corporate and Investment Banking, and we're speaking with the chief economist, Evgeny Gavrilenkov. Welcome to INSEAD Knowledge.
My pleasure.
Your experience in economics and forecasting in Russia dates back to the early 1990s when you were part of the state planning agency Gosplan. How would you describe the state of Russia's finances today?
I think today we have a rather balanced situation on the fiscal side. I mean the federal government and the general government as well. Major change occurred in the early 2009 when the central bank stopped targeting the exchange rate, and the exchange rate is almost fully floating. And when people blame Russia for too much dependence on the oil price, I always say that Russia's dependence on the oil price is not worse than the dependence of some economies on printing money, because this is largely the same story. The more liquidity is being injected by the Fed, by the European Central Bank, by other major central banks, the higher the level of oil price in particular. We have to keep in mind that 50% of federal budget revenues they originate from the direct taxation of the oil sector. So this will be a function of the price of oil, exchange rate, and let's assume volumes of exported oil unchanged. So if oil goes down, the ruble weakens in this flexible exchange rate regime. And this will largely offset the low oil price revenue. So I would say that flexibility of the exchange rate made the budget and the economy is more resilient to external shocks. So I would say that if the oil price, it's just a case study, goes down to, let's say, $80 per barrel, a scary level for many. But according to my calculations, the budget deficit will be less than 3% of GDP, which is easy to manage.
A lot of countries would be happy to have that level of debt.
Yeah, we have surplus. We had surplus in 2011, and last year the budget was balanced, despite increased expenditures.
Sberbank CIB says that it wants to become the #1 choice for investors and financial institutions who want to invest in Russia. Now, Sberbank CIB is the former Troika Dialogue, which is the oldest and largest investment bank in Russia, so you already have a significant client base. But how do you improve transparency in the country?
I think in a broader sense, integration of the Russian companies, of the Russian economy, and WTO accession, probably joining the OECD, everything which is aimed at bringing Russia's regulations to world standards to accept, import the same rules of the game, that's what makes the economy more transparent. And always when companies, banks, doesn't matter, when they need to borrow, they have to disclose their balance sheet, ownership structure. So it's integration in a broad sense what will bring, and is bringing gradually. The economy was completely closed 20 years ago. It's more open than ever, and it's becoming more open. The more companies are listed, and the higher the demand for financing.
Are there any particular sectors that are ready for this kind of investment?
I think most of the sectors are ready, and I'm talking about not only the global financial markets, but also the domestic, the ruble bond market. And this segment is booming. And let's say 7 years ago, the corporate bond market was virtually non-existent. Now it's one of the major sources of liquidity for local companies. And even when they borrow locally, they have to submit their balance sheets and meet the same standards, almost the same standards as when they borrow internationally. So I wouldn't say that any segment of the economy is ready for that. All of them, they will be ready once they will need financing.
Russian banks say they're concerned about meeting an increased demand for loans, and they've asked the central bank to extend the length of time for such additional liquidity to be available. Who wants these loans, and what are the risks involved in granting them? I
wouldn't agree with bankers who say that clearly demand for loans is high, and as a result of that, our banks in the retail segment, consumer loans expanded by over 40%, around 45% as at the end of last year. That's too much. The economy doesn't grow that fast. And when this happens, this is demand when demand grows that fast, it means that risks are not properly taken into account. So what the central bank is trying to do now, they should be much more conservative in my view, because this is a clear signal that there are signs of overheating on the consumer side, and I disagree with the bankers. Demand can grow, but no doubts people and bankers themselves, they want to borrow as cheap as possible and as long as possible. But sometimes people, both bankers and consumers, they forget about risks, and that's exactly what we have currently.
You're on record as saying that you're concerned about the finance ministry's borrowing, fearing that it's going to increase interest rates and perhaps force borrowers to turn to foreign markets. Are you still concerned?
Yeah, this is my major concern. I think it was a policy mistake last year when the Russian finance ministry, while during the year, most of the year, they were running the budget with surplus, huge surplus, absorbing liquidity, pushing interest rates higher. But at the same time, they became net borrowers. So it was a double impact on money markets, so that within a couple of months in the second quarter, when they expanded domestic borrowing, plus they were running the budget with huge surplus, overnight rates went up by 200 basis points. So this is quite costly for the rest of the economy, and that was exactly pushing the rest of borrowers, in particular banks and corporations, outside, crowding out effect. So that's wrong policy, because when, in my view, when the finance ministry, why they borrow, the budget was in surplus, and for the full year it was balanced. There was no need for financing. They have a strange idea to replenish the reserve fund via domestic borrowing. They borrow locally at, let's say, around 7% plus. Then they put this money into the reserve fund, into US treasuries, German bonds, and other low-yielding instruments. And this is a wrong message for the others, because if the government, in fact, this is part of capital outflow, if we put it in a proper way, or at least if it's not a pure form of capital outflow, it's signal to others. If the government does that, if they borrow locally and then convert those rubles into dollars, why the rest should be doing the opposite? Don't bet against the Russian finance ministry.
How are you voicing this concern?
I'm writing notes for clients in the press, locally and internationally as well. Everything is available. I'm meeting government people from time to time, so I'm explicit on that.
Russia's been talking about modernizing its economy, getting away from being reliant upon commodities for some time. What are the main stumbling blocks?
I think the Russian economy is quite diversified. It may be contrarian, but what people normally see from outside, they see 10 or 15 listed stocks, mostly on the energy sector. That's the bulk of export revenues, where it comes from. If we look at national account statistics, we could easily find out that this sector, raw materials extraction, which is represented on the market, it didn't grow at all in physical terms. There was growth in nominal terms because of high growing oil price. But in real terms, extraction of oil, gas was not growing just 0.5%, 1% a year. So since 2003-04, there was just few percent growth cumulatively. While the rest of the economy, including manufacturing, not to mention services, construction, agriculture, grew at a much faster and cumulative growth was stronger. What is not usually seen is that economic growth is driven by domestic demand, consumer and investment demand. And local producers, they respond to this demand. So it's the so-called hidden part of for foreign investors, hidden part of the economy, because those companies, medium-sized companies, small companies, they normally do not borrow that much. They are not listed, but nonetheless, that's where the growth comes from. Domestic demand and medium-sized companies, that's the driver of the Russian economy.
How can partnerships with foreign firms help the modernization process?
It's already helping, because we know that it's not only big names like major oil companies, but huge number of medium-sized Western companies from Finland, from Sweden, from Germany, from Asian countries. They cooperate with medium-sized and small Russian business, and clearly business culture, which is being brought into in Russia. So that's how it helps. Those foreign companies, foreign firms which set up business here, they bring sometimes skilled labor. And this is what we have seen in many regions, including the Kaluga region next to Moscow, where automakers started their business, and in many other cases.
Let's talk a little bit about the outlook for the rest of the world. You've said that the US and the EU need to move in a more correct, well-formulated direction. What do you mean by that?
Printing money, as I tried to say earlier, it's not a solution. It just helps to postpone the solution, just keep the patient alive, but it doesn't cure, not necessarily. Currently, debt to GDP ratio is high in the US and it's growing. It's high in UK. People still believe that what was driving the demand, it's debt. Rising leverage and debt all across. Doesn't matter whether it was private debt, like in the United States, which was later substituted by this state debt, or it was pure public debt, like in Europe. Eventually, it's national debt, which becomes an impediment for growth. The policy which was chosen by the Western governments is to gradually deflate this debt to GDP ratio by I would probably agree with Congress in the United States, which encouraged the administration to be more decisive in fixing the fiscal situation in the United States, because this is the reserve currency. People rely on the reserve currency. And in my view, the reserve currency, when it's printed by the government, which has such imbalances, it's very shaky benchmark, and that's why we have such unstable and high commodity prices. Other asset prices are very volatile. I'm afraid that we have to forget about those nearly 5% growth seen in the past decade worldwide for the global economy, and we have to get used to 3 or maybe below global economic growth.
Russia is due to join the World Trade Organization in the next 7 years. What are the main things that need to be done to tidy up the economy?
In my view, in the short term, I won't expect any significant impact on the economy. I have to remind another case. There was a country called Ukraine. There is still such a country called Ukraine. They joined WTO years ago. And nobody even noticed that the country became a WTO member. Why I'm saying so, and why it's relevant for Russia as well, according to those agreements, there will be gradual tariff reductions for various trade groups. Let's say from import tariffs, I mean, from 14 to 11%, from 9 to 6, something like this. But I mentioned earlier that the exchange rate is almost fully floating. We have seen fluctuations around 40% at the end of 2008, in the early 2009. We have seen fluctuations around 20% in 2012 and 2011. So foreign exchange rate fluctuations, they fully offset those cuts in tariffs. So for the economy in general, I don't expect any major impact from WTO entry. Longer term, I would expect that WTO will be beneficial for Russia, because those medium-sized companies, which are not seen yet by the West, by the rest of the world, they may have an opportunity to start exporting something.
What is your outlook in general for the global economy this year?
I would expect, given the debt burden we have in most part of the world, developed part of the world, that growth potential will be limited. I wouldn't expect the European economy in general to grow faster than 2% in the next decade. Of course, there will be slow growth, but the United States, because of the same problem, I cannot expect much faster growth. China gets bigger. It's already half of the US economy. It's almost $8 trillion economy, and it cannot grow indefinitely by around 8-10%. Otherwise, there will be not enough resources. Planet will be too small for China. So China has naturally to slow down as well. If China will grow 4 to 6% next decade, it will be normal in my view. And this will bring overall growth at around 3% back to normal, what we have seen in the past. I hope there will be no major overheating, but this is major uncertainty. What's going to happen with this debt and how it will be restructured or paid or whatever. Russia has a chance to grow slightly above world average. I don't expect 6-7%. That's what we have seen in the past decade. I think potential around 4%. That's what can be easily achieved with proper policies. If policies will be domestic policies will be not good, then growth rate will be slower. We need to find the right balance between low quality institutions and decent macroeconomic policy. So if we find this combination, we can grow by around 3.5-4%. But institutions, it's property rights, and that's the major legal system. It's the major challenge for Russia.
Evgeny Gavrilenkov, thank you very much for being with us on INSEAD Knowledge.
Pleasure.